Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, February the 28th. The year's 2020. Let's talk trading. Weekly wrap up and monthly wrap up. Last trading day of the week and the last trading day of the month. So, it's a pretty exciting day out there. Uh, Coronavirus has seemed to have infected our markets. And that's just one other reason why you need to have your risk management in place so you don't lose any more on one particular trade than you're willing to lose on that particular trade. So, I mean, there's just unbelievable movement here. And so, as we're preparing to look at the charts, let's just keep in mind, fellow traders, these videos are for educational purposes only. Your results may differ from mine, and that trading is very, 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 very risky. That you can lose all of your money. That being said, if you are looking for trading advice, financial advice, investment advice, seek the advice of an accredited financial professional. That way, when you take their advice and you lose your money, you know you took the advice from an accredited financial professional rather than somebody with a funny name who posts YouTube videos, or you read something in an email or a blog post, or you saw something on Twitter or YouTube or Facebook or wherever. Okay, we've got a lot of gaps that haven't filled. And as you can see, there is a huge red candle here. Now, this is the weekly chart. And remember, boys and girls, I had told you that, this was a big candle. Look for price to come to the open. And this was a pretty big candle. And this was a pretty big candle. And look for price to return to the open. Well, I don't have a crystal ball, but I do know how to run statistics. And statistically speaking, price usually returns to those opens of these big candles. So there's another big one here, and there's kind of a big one here. So there's still some room to the downside. And when you look at these charts, these horizontal lines, it's just incredible. So, as you can see, we're just 6 pips off the daily, weekly, monthly, and yearly low. Did you think we were going to get here when we were here just 1, 2, 3, 4, 5, 6 days ago? 460 pip drop. I mean, think if you would have taken the short out of this upper wick zone on Friday of last week and held, look where you'd be today. Now, yesterday we exited out of the range, the opening range here for the week, but look what happened here. Not only did we do that yesterday, but today we've exited through the opening range low here of the month and the year. Once again, putting in a new yearly low. Just more of the downside. I guess the only weekly buy zone trade was on Monday. Now we went right through that weekly inside bar, and now we are in the monthly inside bar from 5 months ago. And so now we've got a long trigger at 108.47 and a short at 105.73. That's on the monthly inside bar. The ranges, let's count the number that aren't over 100. We've got 1, 2, 3, 4, 5. And let's see, who is the leader here? We've got the beast off 327 pips off the open, 388 range on the day. This is just one heck of a day. I'm trying to see who the winners are. and then there doesn't seem to be. It seems like the only pound. Well, we got 2 pound pairs up. We've got a couple. We got a €1 pair here down. So this has just been one of those days. Putting in the off of that H1 highest open in the 3rd hour of the day, it was just all looking to the downside from there. We didn't hit the pivot point today, and we're 225 pips away from it. Probably won't be hitting that anytime soon, right? And green rats, it's time to feast. And you can see here the green rats already had one little bounce. And we came back down through that monthly pivot, hitting almost weekly S3 for the pivot traders. That's some huge bars. Oh, by the way, we took out that weekly pivot here. So we haven't missed the weekly pivot since October 2016. So when you play these pivot trades, you're just looking at statistics. Sometimes you might have to wait a while. In this case, you would have had to wait a couple of weeks. Price action, no matter where it opens, it doesn't seem to stay between those two lines, especially today. Look at this range. It's pretty much impossible for it to do that. In and out, very small wick zone yesterday. It's almost a horizontal line there. And here you can see on the Einstein line, there was a blip, but with all the blood being spilled, those going long, not advised. Just kind of let the day play out. Or even through the lower weekly ATR zone. Actually, we're below it there. You can see where the daily was. But I mean, the range here on the day 212, the range on the week 412, average range of the week is 122. The daily was bigger than the average range of the week. So it's just huge movement. So I'm trying to bring these lines down so you can see right here where we are from that weekly open line here. We're all the way down here. So and I haven't seen this in a while where we actually went past the ATR range on the weekly. Daily, yes. Weekly, I can't remember the last time that's happened. This is huge movement. And so, fellow traders, as you can see for the week and for the month, there's just been a lot of movement. Right here, once again, we're putting in a new yearly low. We're only 4 pips above it. A lot of damage here. A lot of damage was done. Then again, those of you short, maybe you're going to be picking up that new Ferrari this weekend, right? But once again, today proves what we've been talking about all week about beliefs, being blinded by them. When it's like you can't believe that it ran this far. Some people they can't believe it. How could it do that? You see, that's why you have to trade what you see. I mean, right here, it's crossing the yearly open, going into negative. People, oh, no, it's going to bounce back because that was their belief as opposed to trading what they see. They see that horizontal line cross. You go in the direction of the cross. I mean, it's just that simple. And in fact, I was talking to a friend earlier this morning, and he was talking about the market. And, he was talking about, I think the market's off. Well, at the time, it was off maybe 10 or 11% for the week on the Dow. And I think the Dow was over 28,000. And we were talking. I said, well, you see, it was above 28, then it came below 28. Well, now it's time to sell. If it goes back above 28, you go buy. You just trade on the side of the line. And it went from what, 28 cross below, 27 cross below, 26 cross below. I'm not sure where it is right at the moment. I guess I could take a quick look. But the point is, I'm just looking at the round number horizontal lines on the chart, and you can see it. You could say it's Harry hindsight, but when you have the same rules, no matter what, if it crosses above this line, you get long. If it crosses below, you go short. That's it. And you can believe all the different things, all the different market pundits and people with their different advice, blah, blah, blah. But when it gets down, it either crosses that line to the upside or it crosses it to the downside. And when it crosses, you want to be on this side of the line short, this side of the line long. Let's see, the Dow is now at 24,854. So it crossed through the 28, the 27, the 26, and now the 25. So it's off 3.54% right now for the day. And we're making a new low right here on the dollar yen. So seeing is believing. We mentioned that before. And so you see it, you might as well believe it, because if you've got some belief that's counter to what you see, you better have some other convincing evidence. Really convincing and compelling evidence to want to go the other way. It just really wouldn't make any sense to do so now, would it? I mean, you know, I just kind of find it humorous when I see, hear, and read some of the stuff that's out there, because if when it gets down to such simple things, you break it down, it's simple. Because you don't hear me say, "Oh, well, you see down here, there's support, or there's supply, blah blah." No, or demand. No, all I see is, this was the yearly low. This is the yearly low. So if price comes above that previous yearly low here, I think I might start buying, and then I could put my stop at the right below the current yearly low, position size accordingly, and as it crosses lines, I can add on, stack on those trades, and that's it. It's not complicated at all. So, fellow traders, I hope you had a profitable week and you're winding up with a profitable month. And I just want you to know one thing: it's not what you trade, it's how you trade it. So go out there and drain the banks. Have a fun, safe weekend and come back next week. And if you're just tuning in, come down here and click on subscribe and click on the bell to notify and click on the like, so more people might get to see these videos. And also you can, share the link to the video all over the internet so more people get to see the videos. The Rumpled One signing out.